So let me tell you a story. It's about a guy named Leo. And Leo, well, he's a regular guy. You know him. He's not some Wall Street genius. He's never yelled buy or sell in his life. But one day, this stock market, this huge, kind of scary world of numbers, it just showed up and knocked on his door. And it didn't really care if he was ready for it or not.
Our story kicks off in a pretty familiar place, a coffee shop. Leo's just trying to, enjoy his morning coffee, totally oblivious that his whole view of the world is about to get a major league upgrade. He glances up at the TV over the counter and sees it. Big red letters, Dow VIV 500. Yikes. The people around him start murmuring, shaking their heads. So what does Leo do? He just kind of nods along, trying to look like he gets it. But inside, his mind is just spinning. Dow? 500? What? Is that bad? It sure sounds bad.
And right there, that's the question that starts this whole thing. What does any of it actually mean? It felt like everyone else in the room got a copy of the rulebook to this giant, complicated game, and he didn't even know he was supposed to be watching.
So, right then and there, Leo decides he's done. Done with just nodding along. He's gonna figure this thing out. So, he pulls out his phone and starts at square one. What even is the stock market? And he finds out it all started, get this, way back in 1792. Just a bunch of guys making deals under a buttonwood tree on a little street called Wall Street. Seriously, that was the start of the New York Stock Exchange. Fast forward to 1971, and boom, the NASDAQ is born, the world's first electronic stock market. No tree needed. And today? Well, today Leo just downloads an app, and just like that whole crazy marketplace from the tree to the supercomputer is sitting right there in his pocket. And just as he's swiping around this new app, his phone buzzes. It's his friend, Sarah. Her little startup? It's going public. She tells him they're having an IPO. Leo has absolutely no clue what that is, but it turns out to be the perfect real-world key to unlocking this whole mystery. So he looks it up. Turns out Sarah's IPO is happening in what's called the primary market. It's pretty simple, actually. This is where a company creates brand new shares of stock and sells them for the very first time. Why? To raise money, right? To hire people, build bigger things, and grow. And that cash from those first sales goes straight to the company.
Okay, but what happens after the IPO? Well, that's where the secondary market comes in. This is where all those shares, which are now owned by investors, get bought and sold back and forth between, well, other investors. The company's not involved anymore. The money just moves between people. And this market, this is the one Leo's new app connects him to. It's the one we're all hearing about on the news every single day. So it finally clicks for Leo. It's all about the goal, isn't it? The primary market, that's for the company. It's about raising capital to get bigger and better. But the secondary market, that's for the investors. It gives them a place to trade with each other. Two markets, two totally different reasons for existing. Okay, Leo's starting to get it. He sees how companies sell their shares and how people trade them. But then he opens his app again and whoa, there are thousands of companies. Apple, Nike, Tesla, and then thousands more he's never even heard of. It's a little overwhelming.
Which of course leads to his next big question. With all these different stocks zipping around, how in the world does anybody know if the market, as a whole, is having a good day or a bad day? You can't possibly watch everything at once. And the answer, he discovers, is something called a market index. And the best way to think about it? It's basically like the league standings in sports, right? You don't track every single player's stats every day. You just look at the league table to see who's winning and who's losing. An index is just like that. It's a little basket of top stocks, all bundled together to give you a quick snapshot of how things are going. And suddenly, those names he always hears on the news, the Dow, the S&P, the NASDAQ, they all make sense. They're just the names of the three most famous league standings. The Dow Jones tracks just 30 of the biggest, most established blue-chip companies. The S&P 500 is way bigger. It tracks 500 large companies, and together they make up like 80% of the whole U.S. market's value. And the NASDAQ? That one tracks over 3,000 stocks that are on the NASDAQ exchange, a lot of which are tech companies. But here's the little twist he found. They aren't all calculated the same way. The Dow is what you call price-weighted, which just means stocks with a higher price per share have more pull. But the S&P 500 and the NASDAQ, they're market cap-weighted. They care more about a company's total value. And that's actually way more common because it gives you a much better picture of a company's real impact on the economy. A huge company will always move the needle more than a small one, no matter what its share price is. And just like that,
Everything clicks into place. So let's go back. We're in the coffee shop again. It's been a week. That same news ticker is on the TV, but this time, when Leo looks up, he's not confused. He's informed. His friend leans over and asks what all that red on the screen means. And Leo, this time with a little smile, doesn't just nod. He actually explains it. He says, the S&P 500? Oh, that's basically just a report card for 500 of the biggest companies in the country. So when it goes down, it just means that, on average, the value of those big companies dipped a little today. He actually gets it. For Leo, this whole confusing world now boils down to 3 really simple ideas. 1, companies sell brand new shares to raise money. 2, investors then trade those shares back and forth with each other. And 3, we use indices like scorecards to get a quick read on the whole game. In the end, what Leo learned was that the stock market isn't some secret language that's designed to make you feel dumb. It's just a system for helping companies grow and a way for all of us to measure the story of our economy, one number at a time. Those numbers on the TV screen, they're not just noise to Leo anymore. They're like the heartbeat of the economy, and they're telling a story he can finally understand. So the question isn't just if you'll watch the game anymore. It's what are you going to see now that you actually know how to read the score?